chestnuts and biscuit ice. Almost there. Uh-oh, my song's over. Song's over, said the girl. Where is it? Where is it? Where is it? That ain't it. That ain't it. There it is right there. I think we're ready to go. Good evening, good evening, good evening. Hello, everybody. Who do we got here? Malt Bikier. Malt Bikier. Okay, how you doing? Nice to see you. Who do we have over here? Okay, we got Nick. How's it going there, Mr. Nick? What do we have over here? Who's here? Who's here? We have... Good evening, good evening. Delaware Kip. Uh-oh. Ugh. I don't like that. Hate emails like that. Kent. Tail Chaser. Newcomer. Jamie. Thomas. Falcon. Burnhaze. Barry. Bolly. Jimmy. James. Jimmy and James. Vegas Night. SpaceX. Hell no. Dude, it hasn't been around long enough. There's no profits available. That's not even any products. No. Okay. Oh, we just did that one. Arik. Aaron. Bummer. Can you move the... Oh, yeah. Sorry about that. You can move the camera a bit. There we go. Sorry. This is the only camera I actually take on and off all the time. Hey, let's check Ford. We'll check Ford in a second. Ford's already there. All right. We'll check Ford in a second. But let's get out of here. All right. That's good to go. You go down there. You go right there. You go right there. All righty. All righty. SpaceX. Check IBM. All right. So we're going to check Ford. We'll check IBM. I need my book to take my notes. Math Hager. Okay. Ulrich. Sweet Dan. Please move the camera. Got that one. Nike. Okay. Yo. How you doing? Gallus. What's happening, Gallus? Galu. Okay. Who do we have over here? Over here we have Reedster, Johnny, DJ, Dave, Mohit, JP, Hoya, Cam, Neil, Smith, Zeke, Joey. It's only temporary. Interesting name. Sang Lashes, nice to see you again. Ford to 18 tomorrow. I don't know. We'll soon find out, won't we? Ford. Here we go. Tony, Retz, Emilio, Steve, Aaron, Gold, Nicholas, New York, New Bills. Okay. Louis, Weave, Fast Money Academy. Okay. Frank, Mikhail. All right. No One Uno. Pete, Chevy, Hog, Pencheesy. Okay. Elsbear. Okay. Kyle. I Am Legend. Nice to see you again. It's not the first time you've been here, but alrighty. Okay, well, that being said, let's get the ball rolling. First, the intros. Good evening. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. What am I looking for? Simple, safe, predictable, consistent. 1% per week. Yes, I did say 1% per week. I'm not looking to strike it rich. I'm not looking for a shiny new object. I'm not looking for new trading strategies. I use one of the oldest trading strategies there is. It's simple, it's safe, it's predictable, and it's consistent the way that I do it. 2008, my nine-year-old daughter says to me one day, "Daddy, can you teach me?" So my 9-year-old little girl wants to learn how to invest in the stock market. This was in 2008. Okay, quite a while ago. So it had to be simple, safe, predictable, consistent, and no way for her to lose. You like that last one? No way for her to lose. So I came up with 5 simple rules just for her. Okay, so for my 9-year-old daughter, the 5 rules are, you ready? Number 1, never buy anything that's not on your list. Number 2, never sell at a loss. Number 3, make sure the company's consistently profitable. Number 4, weekly options only. And coming in at number 5, we have make sure all the numbers work in your favor. Okay? So let's get the ball rolling. Let's see. You guys are going to suggest stocks for me to take a look at. I'm going to take a quick peek at them, see if they fit what we're trying to do. Simple, safe, predictable 1%. All right. Rich, Jeff, Big O, Corey, Juice. Juice, really? Rob Lee, Moco Biz, Joey V, Brutus. We'll take a look at that one. All right. Hang tight. Let's do this. Here we go. First on the list tonight. First one to make the list. Yay, it's Ford. Ford. It's over 100 years old. Ryan, nice to see you there, Mr. Ryan. Thank you for showing up. Let's take a look at Ford. Now, anytime I look at any stock, it's always going to be the same thing. Same thing over and over and over again. Okay, I look for 5 things, and it takes me 2 seconds to see 5 things. Let's see how long it takes you. Now, once you see it, you can never unsee it. It's just like, oh, okay. You can never unsee it. You ready? 5 things. You ready? Here's 1, the high of the year. Here's 2, the low of the year. Here's 3, where was it a year ago? Here's 4, where is it today? And 5, up, down, up, down, up. Where's the flow? Where's the money going? Are people buying? Are people selling? Where is the stock moving to? Simple. Up, down, back up again. That area right there is this week. Gives me an idea of what's coming next. Ryan, we'll take a look at Home Depot in a minute, all right? That being said, once I see the chart, it's always going to be the first thing I always want to see. Always, the 1-year chart. I want to see what's going on. The high, the low, the movement, all that kind of nice, neat stuff. Once I get that figured out, rule number 5 is make sure all the numbers work. What am I buying it for? 14.19. Well, if I'm buying it at 14.19, what am I going to sell it for? Now, most people buy a stock and then they wait for it to move. And then they wait. And then they wait. And then they wait and wait and wait until they decide, well, that's enough of a profit. I'll get out. Or if it drops, I'll get out. It's going down, that type of deal. No, never ever sell at a loss. Rule number 2. All right, so if I'm buying it at 4.19, I'm going to turn around and sell it for either the 14 or the 14.50. Now, a covered call is where you buy the stock first, and then you turn around and sell it at basically the same price I just paid for it. So if I paid 14.19, I'm going to sell it for 14, which is less than I paid for it. I want you to listen to something very closely. I'm going to buy it at 14.19. I'm going to sell it for less than I paid for it and still walk away with a profit. Shall I say that again so you get it? I'm going to buy it, sell it for less than I paid for it, and walk away with a profit. That should say, wait a second, that doesn't make sense. Well, you're right, it doesn't make sense, but let me walk you through it, and you say, oh, I see. You ready? Here we go. How? Yep. Someone wants to know how. All right, so purchase price $14.19. I'm going to sell it at 14, which is less than I paid for it. So if I sell it for less than I paid for it, I'm losing 19 cents right off the top. 14.19, I sell it at 14, I'm losing 19 cents. But here's the thing. With a covered call, I'm going to sell it at 14, and whoever buys the covered call from me, they have the right to buy it from me at 14 anytime they want between the strike price, which is 14, and the date, which is 24 July, which is next Friday. So they have a whole week to figure out whether or not they want to take it from me. Honestly, I really don't care. I'm walking away with a profit, selling it for less than I paid for it. Let's keep on going. All right, so 14.19, I sell it at 14, I pick up 38. So I'm walking away. I'm walking away with the $14, the call option right there, and they're going to give me 38 cents per share. Okay. So I'm actually walking away with $14.38, but I bought it for $14.19. Well, you take $14.19 off of there, I'm only walking away with a 19-cent profit. I know 19 cents doesn't sound like a lot, but guess what? 1% of 14 is 14. Let me say it again. 1% of $14 is 14 cents. So if I'm walking away with 19 cents, that's more than 1%. That's all I'm looking for. I'm not looking to buy something and hold on to it forever. I just want to take it for a little bit of like a test ride. And it's like, hey, you like that little puppy? Take him home for the weekend. Tell me what you think. Same thing. I want to take it for a week, take it for a spin, and I'm going to give it back to you. I'm going to buy it at $14.19, sell it at 14, walk away with $14.38. 19 cents is my profit. Not a huge profit, but here's the thing. I'm not looking for huge profits. How did you get the 38-cent gain? Corey. I tried telling you, Corey. The 38-cent gain. You ready, Corey? If I buy it at $14.19, I'm going to use what's called a covered call. I'm selling it to someone using a call stock option at 14, and there's the 38 cents right there. So the 38 cents, whoever buys the option from me, I'm assuming the person who wants to buy the stock at 14, they're going to pay me the 38 cents per share. And once all the dust settles, you know, a little bit of math here. I buy here, sell there, I walk away with this. That's what I walk away with. You got it, Corey? Nice. All right. So let's do this one. This will be the first one of the night. Ford. Yay. If you like Ford. So let's do this one. Let's be the first one. I'm going to need my glasses. Yeah, let's get rid of this. We're going to change it to covered call right there. The 14's right there. And this, do you remember the part where I said simple, safe, predictable? This is where predictable comes in. Now, before I do anything, this is what the order looks like. So before I hit that button right there, that sends it to the market maker and say, hey, hook me up, brother, give me some stuff. Before I do that, I want to read it out loud to make sure it sounds right. You ready? I'm going to buy one covered call, Ford, which is F, 24 July 26. So whoever buys this from me, they have between tomorrow morning and next Friday at 3:59 p.m. Because at 4 p.m., they can't do anything because the market closes. All right, one covered call, Ford, 24 July, that's next Friday, the $14 call option. Here's my profit, $20. Big deal, but it's $20 per contract. So each contract I do, I get $20. All right, let's do some math to see just how profitable that is. Calculator. Uh-oh. That's not good. My calculator disappeared. Aha. There it is. There it is. Now let's get back to where we were. Get back. Get back to where you once belong. There it is. Calculator. Oh, where did my order go? Confirm and send. Now I need a calculator. There we go. Just get everything in order. All right. So, calculator. To find out my rate of return, I take my profits, the $20, and I divide it by the investment. Anytime you can have a rate of return, you're going to need to have some type of investment, some kind of skin in the game. All right, so that being said, let's do this. $20 is the profit. My investment is the cost of the trade, including commissions and fees, and that is $13.80. So we divide that by 1380, and that comes to a grand total of 1.4%. Now think about that for a second, okay? I'm going to buy it tomorrow morning. I'm going to sell a covered call 2 seconds after I buy it. And then I'm going to make 1.4% for selling it for less than I paid for it. Isn't that weird? I'm going to buy it $14.19. I'm going to sell it for 14, and I'm going to walk away with a profit of 1.4%. It's Ford. It's over 100 years old. I don't think it's going anywhere. But think about it. 1% every single week is over a 50% return. Now, I just did one to give you an example. More than likely, I'd probably do like 50 or 52, something like that. Figure out what your portfolio looks like. What does a safe trade to you look like? It's always going to be different because we're different people. We're all on our separate journey. My journey, simplicity, safety, predictability, all that kind of nice stuff. So, Ford, first one on the list, 1.4%. Yay! All right, right there. %1.4%. Let's do this. All right, let's clean this up a little bit. Oh, shoot. Okay, get rid of that. Get rid of that. Change this back to this. And change this back to that. And there we go. All right. So Ford. Here, come on. There it is. One covered call, Ford, 24 July 26th. That's next Friday. The $14 call option. Well, look at the price now. It's $14.13. It's still above 14 and it is going up. Okay, fine. $20 is the profit. $1,380 is the investment for a 1.4% for 1 week. Now, does that make sense? Buying a stock, a Ford, it's over 100 years old. I'm buying it, selling it for less than I paid for it, and still walking away with a profit. Just love that idea. GoPro. Really? GoPro? We'll take a look at it. Can't make you any promises, though. All right, so we're going to save this one. What do we say, 1.4%? 1.4% for Ford. Next, Home Depot. Okay, someone wants to take a look at Home Depot. Now, if you didn't know, Home Depot may not be 100 years old, but Home Depot does have five decades of consistently increasing their dividends. Let's get rid of that. Not now. All right. So, Home Depot. Here we go. Always looking at the same thing. I'll look at the 1 year chart. 5. 1, 2, 3, 4, 5. Look at that right there. That should stick out like a sore thumb. That should be the first thing you see. Now, Home Depot, I don't really do a lot of research on it, only because it is a dividend king. And they do already have 5 decades of increased profits. But look at what we're looking at. In 30-day bottom, she shoots up. Here's your 30-day top. Here's your profit taking. Here's your new bottom. And now she's rolling up. 348. The 347.50s are going for 540 again. I'm going to buy it, sell it for less than I paid for it, and walk away with a profit. I wish someone had told me this when I first started 30 years ago. I've been investing for 30 years. Nobody ever showed me anything like this. Let's check it out. Let's get rid of that. Back to the covered call. I'm going to sell it for less than we paid for it. Okay, let's take a look at the numbers. One covered call, Home Depot, 24 July, that's next Friday, the 347.50. The stock is currently at 348. If I buy it at 348 and I sell it for less, 347.50, I'm still walking away with $542 per contract. One contract, 542. Two contracts, what is that, 1,084? You need to decide how much is right for you. Can you do one? Can you do four? Can you do 15? How many? We're all on a separate journey. My portfolio is different than yours. We're not the same. We're not looking for the same things. I'm looking for safety and profitability and predictability. All right, let's do this one. Calculator, come out wherever you are. All right, profit, 542. 542 is the profit. Well, to find out my rate of return, I take the profit divided by the cost of the trade, including commissions and fees, 34,000. Yeah, this is definitely an adult game. 34,208 gives me roughly 1.6%. Roughly 1.6% for 1 week. Now remember, I'm investing for weekly cash flow. That twisted air thing is not the international sign for 15. Wait a minute. That's not 15? It looked like 15 to me. Thank you. All right, so 1.6% for Home Depot. Home Depot is a dividend king. Hold on. You do know what 5 decades is, right? 5 decades is 10, 20, 30, 40, 50 years of continuously increasing their profits, increasing their dividends. Well, that works for me. When Home Depot, any dividend king pops up, to me, I don't really check the numbers anymore because if they're dividend king, for me, it's an automatic yes, as long as the numbers work in my favor. But I don't check, I don't check the profits of the company. I don't check this. I don't check anything. It's a dividend king. You cannot be a dividend king unless you have 5 decades or more of increased profits. It's one of the criteria of being a dividend king. And you can get kicked off that list. As a matter of fact, I know a couple of them got kicked off. Chubb, CB, Chubb, the Chubb Corporation. They used to be a dividend king. And for some strange reason, one of the executives thought it was a great idea to cut the dividends a little bit, and they got kicked off the list. So now they get started over from ground zero, which means you have to start from zero and consistently increase your profits for 5 decades to get onto the dividend kings list. Let's check out the numbers. Oh, 1.6. Oh, hell yeah. 1.6. Let's clean up the computer while we're waiting for that to load. All righty, here we go. Right there, Home Depot. Oops, I think I boo-booed. I don't know, we'll see. One cup. Oh yeah, I did. Huh. One covered call, Home Depot, 24 July, that's next Friday. The 347.50 call option. The stock is at 348. So if I buy it at 348, sell it at 347.50, I'm selling it for less than I paid for it and still walking away with the profit. That's freaking nuts. It is. Think about it. It's crazy. Buying it, selling it for less, walking away with a profit. No? You don't think that's cool? I think that's cool. All right. 1.6. No. Profit, investment, 1.6%. And this is Home Depot. Next. That's 2. Every night we look for 5. 5 good quality companies that are consistently profitable, that increase their dividends, and they have weekly options, and everything just looks good. All right, let's check it out. What do we have next? What do we have next? GILD. Kyle, what is GILD? GILD. Interesting. Gilead. Okay. First thing you should see, Kyle, is the high of the year. The bottom of the year, where was it a year ago? Where is it now? And what is the flow of money? You see that right there? Up, down, up. It's at 136. The 136 going for 216. That's over 1%. Let's take a better look at it. Your last 30 days. What do you think? The top, the bottom, where was it? Where is it? Up, down, up. 136. The 136 going for 216. That's over 1%. So if I buy it at 136.30, sell it for 136. Again, this is the 3rd time in a row. This very rarely happens. To be honest with you, this very rarely happens where I buy something, I sell it for less, and I still walk away with a profit. This is the 3rd time. And it doesn't happen that often. Buy it, sell it for less, walk away with a profit. Let's go. Let's do it. Number 3. Covered call. Yo, let's do it. Let's kick it. All right, the 136 is, need the glasses. You would think, what is that, 5-foot screen, a 60-inch TV? It's a 60-inch monitor, 5 feet away. Literally, watch this. I'm going to put my hand here, and I'm going to touch the monitor. See? Look at this. I'm touching the monitor, and it's a 60-inch monitor. It's like this big. And I still need the damn glasses to see 5 feet away. Don't get old. It's not. Some parts are great. Come and go as I please. I do whatever I want. If I want to take a vacation, I just go. I don't have to answer to anybody. But you know what sucks? I need glasses. Okay? If I hurt myself, it takes longer to rest. I play soccer every couple of Sundays. I'll play soccer for an hour, and it takes me 3 days to recuperate. You ask, don't even bother asking, well, why do you do it? Because I enjoy doing it. See, at my age, I don't know how many games I have left in me. So when I get on that field, man, it's fun. All right, so anyway, here we go. Ooh. Confirm and send. Okay, right there. One covered call, GILD, Gilead. 24 July, that means it's expiring next Friday, 1 week away. The 136 call option, look, it's at 136.97. The current price, 136.97. I'm going to sell it for less, walk away with $210. It's cost me $13,000. Now, look at it this way. It's not costing me $13,000. I'm just putting up $13,000 because I'm creating what I call weekly cash flowing assets. It's an asset. So I buy it, okay? I sell it, I collect a profit, and I have 2 choices. Because next Friday, when the option expires, I'll go in early and I'll take another look at the chart. Is it worth it for me to hold on to it and pick up another 1 or 2% for the week after? Because see, every Friday I ask myself the question, what did I buy? Well, Gilead, 136.30. What did I sell? The 136 options. Where is it? Well, right now it's at 130, where are we? 136.97. Where does it look like it's going? It either looks like it's going up, or it looks like it's going down, or it looks like it's going sideways. It's one of the 3. 1, 2, 3. What do you see? That's it. 1, 2, 3. What do you see? Is it going up? Is it going down? Is it going sideways? Number 5. What should I do? What did I buy? What did I sell? Where is it? Where's it going? What should I do? So I might hold on to it for longer than a week. Okay, I held on to Kohl's. No, wait, was it called? No, it was Walgreens. WBA for 18 months. Okay, well, I'll see if I can get this across to you. I bought Walgreens, held on to it for 18 months. Do the math in your head. Each month has about 4 weeks. So every single week for 18 months, I got a cash premium every single week. And after 18 months, I finally sold it for more than I paid for it. Isn't that crazy? 18 months, 1%, 2%, 2%, 1%, 3%, 1%, 1%, 2%, 3%, 4%, 1%, 2%. 18 months I did that with Walgreens. Okay, year before that, it was, U.S. Steel, and then Macy's, and then Kohl's. Ooh, we find a good stock, we just hold on to it, just keep rolling and rolling and rolling, keep the money flowing. It's awesome. Rajram, what's happening, Rajram? Nice to see you. All right, so let's do the math on this one. Calculator, if you please. Profit. These damn freaking glasses. All right, 210 is the profit. Divided by the cost of the trade, including commissions and fees, 13,390. Okay, divide 13,390, and that gives me a rate of return for 1 week, 1.5%. 1.5% for 1 week. This is the third. This is the third one for tonight. Boom, boom, boom. First three. 1, 2, 3. One, more than one, more than one, more than one. Three. I just showed you 3 of them. I'm buying them, selling it from less what I paid for it, and still walking away with a profit. That is freaking nuts. All right, so what do we got? 1.56%. I'm going to save this one. 1.5%. Johnny, tell him what he's won. Well, Bill, here we go. Gilead Sciences. Okay. Oh, wait, I forgot to say this. If, and only if, you actually like the company. Okay, so once you find one, great. You get 5 questions rattling around your head before you hit that send button. Once you hit that send button, it goes to New York, it goes to Chicago, and the orders gets filled. Well, make sure you like the company. Okay, I got 5 simple rules. And rule number 1 is never ever buy anything you do not want to hold on to long term. If you don't understand it, don't buy it. If you can't explain it in 2 or 3 seconds, don't buy it. Never buy anything you don't understand or you don't want to hold on to long term. All right, so we're going to save this one. Clean this up. Clean up, everybody clean up, clean up, clean up, clean up is fun. Barney, didn't you know that? Barney, okay. Here we go. Gilead. One covered call, Gilead, G-I-L-D. Give me a G, give me an I, give me an L, give me a D, Gilead. Okay, 24 July 26th, that's next Friday. The 136 call option, is that right? 136.97. 136.97. I'm gonna sell it for 136 and still walk away with a profit. That, my friends, is crazy. Okay, 210 the profit per contract. 13,390 is the investment. Either you like it or you don't. $1.6 G-I-L-D. Yay, Gilead. That's 3. We got 2 more to do. 2 more. Can I get a 1? Can I get a 1? Can I get a 1? 1. All right, what do we got? Which peptides are good for muscle growth? You're asking the wrong person, dude. Okay, my expertise is investing and strategic investing. La 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 la. Nomad. Good evening. Oh, Rob Casey. That twisted ear thing is not. But it could be. Rob, it could be. 15. It could be, Rob. All right, so TikTok 1, 2, 3, 4, 5, 6, 7, 8, 9, 0 wants to take a look at KHC. Now, KHC, if you didn't know, is Kraft Heinz. Kraft Heinz ketchup. Okay, Kraft Heinz. Let's take a look. Also, if you didn't know, Kraft Heinz, KHC, is another dividend king. Now, very rarely do I buy KHC because usually these numbers here don't look that glamorous. 26, 23. The 26 is going for 52, but you take 23 off that 52. Now I'm walking away with 19. This is the part where we say, nope, that's a no. The 26.50 is going for 27. Yeah, that one right there, 26.50, 27. That's more than 1%. Love it. But what do the numbers look like? And what does the chart look like? Oh, hell no. Why didn't I see that first? The reason I'm saying no, it's a dividend king. It's got 5 decades of increased profits. Okay, but look at where it is. Here's the top here. Here's the bottom here. Here's where it was a year ago. Here's where it is now. Look at this. Down, up. Well, I don't buy anything at the high. It's not the high of the year, but look at this. It is definitely the high of the 30-day period. And I don't buy anything at the high of the 30-day period. Because I've never, ever, 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 ever heard anybody say, hey, Kraft Heinz is at the high of the year. Let's buy it. No, I've never, ever heard that. Buy low, sell high. No. That's it. That's a no. Sorry, dude. Ryan, Kraft Heinz is no longer dividend. Whoa, 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 whoa. What do you mean Kraft Heinz is no longer dividend king? When did that happen? Holy cow. Seriously, I didn't know it was no longer dividend king. But thank you for that, Ryan. I'm a little disappointed. All right, what do we got? What do we got? Papa Slaya. Tessa Moreland. Okay. Bob Casey wants to take a look at Campbell's Soup. CPB. CPB. Ooh, maybe. Check that out right there. The high, the low. Where was it? Where is it? Look at this. Up, down, up. That's definitely going up. 22.65. The closest one we're going to see is the 22.50. It's going for 45. Hold on. We might have to do the 23s. It's 22.74. That's after hours. After hours is at 22.74. So the closest one will be the 23, and that's going for 25. Well, that's a yes. A yes. All right. So we all know who Campbell's Soup is. Okay, right there. Cool. All right, you get out of the way. You go right here. You go right there. You go with the glasses assistance, of course. The 23. There it is. And let's give it a good old read. You ready? One covered call, CPB, Campbell's Soup. 24 July, that's next Friday. The 23 call option. The stock. That's not moving. All right. Okay. Well, I'm going to say yes, but let's take a look at the calculator. What's the calculator telling us? The calculator... Profit is 67. Okay, hold on. See, max profit, 67. Do you remember the part where I said simple, safe, predictable? Do you remember that? Simple, safe, predictable, consistent, 1%. Simple, safe, predictable. Everything I need to know is right here. Before I even do the trade, before I hit that button right there and send it to the market maker, I double check everything. I want to know what's going on. I'm buying one covered call. Campbell's at this price. This is what my break even is. This is my profit. This is my maximum loss. This is my investment. This is my investment if it was on margin. So everything I need to know about this particular trade, not the company itself, but this particular trade is right there. And then I put the numbers into the calculator, and the calculator is going to tell me, is it profitable? to the extent that I want it, which is 1% or more, or is it not? It's a yes, it's a no. Let's find out. 67 is the profit. Profit, 67. Investment, 2233. 3%. Now, I know I said my goal is 1% a week. Okay? So my goal, 1% every single week, it comes to 50% a year or a little bit more. But you do have to put some time and some effort into it. Nobody's going to magically say, hey, here you go, 50%. No, it doesn't work that way. It takes 5 to 10 minutes every day. I look for a good quality company. Number one, find a good company. Every single week we check. Every week we check how many companies are there this week, because they keep adding more and more and more and more. So as of this week, Sunday, we counted 11,497. That's a lot of companies. But I'm only looking at 350, because only about 350 have consistently increased their dividends for a minimum of 10 to 20 years. The dividend contenders, 10 to 24 years of increased profits. The dividend aristocrats, 25 years. The dividend champions, 25 years. The dividend the dividend kings, 50 years, consistently increasing their dividends, increasing their profits. And then for the fun of it, list number 5, we're going to peek over what's his name? Warren Buffett's shoulders. What's old Warren doing? Is Warren doing anything? Well, I want to see what he's doing. 5 lists: dividend kings, dividend aristocrats, dividend champions, dividend contenders, anything on Warren Buffett's list. Rob, Campbell's soup is that way right now, not advice, just my opinion. Thank you there, Rob. I appreciate that. Thank you, Papa Slayer. Yep, thank you, Papa Slayer. All right, Francis. I'm not quite sure WTF is actually a company, but we'll take a gander at it. All right, let me get my seat so I can answer some questions, because we're up to 4 already. Wait a minute, wait. We got to save this one. I believe this is number 4. Is this number 4 or number 5? I don't know. All right, let's get rid of this. Get rid of that. Get rid of that. Change this back to there and do this right there. Okay, there she is right there. Campbell's. One covered call, Campbell's CPB, 24 July. Well, that's next Friday. The 23 call option. Well, we're looking at $67 as a profit, and my investment is $22.33. For what did we say it was? What's the rate of return? Calculator, 3%. 3%? Yeah, baby. %. CPB. We got one more to go. Before we get to that one more, let's answer some questions. We got questions. Oh, before we move on any further, just let me give you a couple of disclaimers. Number one, I'm not a financial advisor. I'm not an accountant. I'm not a bookkeeper. I'm not a tax specialist. I'm just some average Joe. That's it. Just an average guy. The only thing after my name is SR, which means I'm a senior, not a junior. That's it. That's all it means. Okay? I'm just some random guy online. Always do your own due diligence. Monica, thank you for that. It was very nice. Thank you. Never listen to some random guy. Do your own research. Ask yourself questions. Does it make sense? Do I like this company? Do I like this company at this price? Is this something that I could do it? You have to ask questions before you do anything. That's just my opinion. What do I know? Some random guy on YouTube. Okay, so let's take a look at who do we have down here? Who do we have? Phil Clinton, talk about the risk. The risk. There's risk everywhere, dude. There's risk if you do nothing. There's risk if you do something. If you lay in bed all day, there's a risk there. If you get up and go out of the house, there's risk there. You jump in the car and start driving, there's risk there. There's not a single thing you can do where there is no risk. But I think he's talking about the risk where you could lose your money. And it's true, you can. I find that most beginners lose their money because they hit the wrong button. Is that the risk you're talking about? He's talking like there is no risk. Well, Phil, let me ask you a question. And this is a serious question, Phil. I want to see how long it takes you to come up with the answer for this one. You ready, Phil? Now, Phil, I was born in the 60s, grew up in the 70s and the 80s, and I had a wonderful time in the 90s. Let me ask you a question, okay? Do you honestly think that Coca-Cola is just going to close their doors and say, you know what, after 140 some odd years, we just don't do it anymore? Or how about this one? Consolidated Edison has been creating electricity for over 200 years. Oh, let's just not do it anymore. How about Procter and Gamble? They're over 100 years old. Yeah, let's stop making cereal. How about Post, Kraft? Who else? Oh, ExxonMobil, Bank of America. They've been around for over 100 years. Wells Fargo, they've been around for 100 years. Do you honestly think they're just going to close up shop and say, you know what? I'm tired of doing this. The risk isn't all in what you perceive it to be. Now, do I honestly think Coca-Cola is going to disappear before I do? Hell no. I'll be on my deathbed and they'll still be making Coca-Cola. I'm pretty sure. I don't guarantee it. There's no way of guaranteeing anything. There's only 4 guarantees in life. Okay? But when I say no risk or minimal risk, I'm talking about companies that have been in business for over 100 years and consistently increasing their profits. 5 decades of profits over and over and over again. More money, more money, more. Of course, there's risk. There's also risk. If you believe that shit, you probably believe that the magic bullet, you know, the Warren report where Kennedy got shot by that one bullet that zigzagged. Yeah, you probably believe that crap too. I don't think Coca-Cola is disappearing. I don't think Consolidated Edison after 200 years is going to close their doors. That's what I mean by no risk. But at some point in time, Coca-Cola is going to stop. Okay, if they drop a nuclear bomb on America and wipe out the whole continent, yeah, Coca-Cola won't be there anymore. But until then, yeah, I think Coca-Cola is going to be there. Graf, how you doing today? Thank you. Chase, what team you got winning the World Cup? Oh, my. I got to go with I'm drawing a blank. My mind is somewhere else at the moment. I think Argentina's going to do it. This guy has never made no profit. Liquid Skittle. Thank you. That's the nicest thing you've said all week. Thank you. Nodia. Crazy world we live in. This guy is giving out valuable info with no 10 viewers. Dude, I'm on 13 platforms. You're on one. There's 12 other platforms that you're not seeing. To the next live, viewers, and then to the next. And I scroll to the next live stream where someone is doing dumbish with 500 viewers. Well, you can't expect everyone to get it. You either get it or you don't. It's either important or it's not. It either makes sense or it doesn't. That's all it is. You're either interested. The funny thing about this, you say that, Nodia. We're the only species on the planet. Okay, we're the only species on the planet that's got to pay to live here. So to the degree in which you want to pay to live here, well, you want to live on the beach with a nice, beautiful home, or you want to live in a tent in the woods. To the degree in which you want to live, money becomes important. Other than that, it's nothing. Okay, Derek thinks Spain is going to win. I don't know. I'm going to watch either way. Okay? And I'm not going to root for one or the other. If I see a good game, I'm going to say, hey, that's a good play. Now, I do still play soccer. I'm 62 years old. I'm not the oldest player on the field. I think the oldest player on the field is 84. Can you believe that? 84 years. He's from Peru. 84 years old, and he still gets out there. Computer, what's happening? Nice to see you. Thanks for showing up. Brian, we'll take a look at Pepsi in a second. Nog. What the hell is Nog? Okay, Nick wants to take a look at United Airlines. UAL. I don't know. What do you think? What's that going right there? Growth investor. Hypothetical question. How to generate $15,000 monthly income from $1 million investment? Well, you do know there's covered calls you can do. $1 million will give you $10,000 a week because 1% of $1 million is 10,000. Okay, so 10,000 a week, 4 weeks, that's 40,000 a month on your million. If you do it that way, now it's at 1%. Now, if you cut it down to 0.5%, which is easy, my 5-year-old grandson could do that. You do what, 3 or 4 strikes out of the money, it's like almost easy. But even at 0.5%, it's still 20,000 a month on $1 million. Hope that worked for you. All right, so United Airlines. I don't think so for this week. Now, not that I'm saying no, that I don't like the company. It's always going to be a numbers game. It either makes sense or it doesn't. Okay, you cannot hide from facts. Facts are just the facts, ma'am. Facts are facts. Here's the high of the year. Here's the bottom of the year. Here's where it was a year ago. Here's where it is now. Up, down, up, down. She's coming down off the high. Eventually, don't know when. I don't think anybody knows when. But eventually, okay, here's your top. Here's your bottom. Stocks do 2 things and only 2 things. They don't come to the house and take the dog for a walk. Nope. They don't make you dinner. They don't dump the trash. They don't trim the hedges. They don't rake the lawn. They go up. They go down. That's it. Okay? Here's the top. She just dropped. She went from 138 down to 116. That is a $22 drop. Or you could call it profit taking. Think about it. Let's back it up for a second. Okay? Look at your low. Way over here, 85. 85, she jumps up to 140. That's a $65 increase. That's about 80%. But an 80% increase, well, yeah, there's going to be profit taking. What happens when there's profit taking? Stocks drop. Well, here we are right here. What's going to happen next? Well, more than likely, okay, I want you to listen closely. More than likely, when it is done going down, it will turn around and go back up again. Because that's what stocks do. They go up until they're done going up, and then they go down until they're done going down. That's it. It's actually that easy. They go up and they go down. That's it. Where are you jumping in? It's an honest question. Think of a merry-go-round. Round and round, round you go. Okay? Okay? The horses on the merry-go-round, they go up, they go down. Stocks, they go up, they go down, they go up, they go down. Where you jump in, okay, you jump in on the merry-go-round. Eventually, you got to jump off on the merry-go-round. Did you make a profit? Did you take a loss? I refuse to take a loss. I will hold on to a stock as long as I can, as long as it's consistently profitable, which means they consistently increase their dividends year after year after year. Okay, and they have weekly options. That's my only 2 criteria. I get 2 criteria. That's it. Weekly options, consistently profitable. That's it. Consistently profitable weekly options. All right, we need one more. One more. Come on, come on. Nog. What the hell is Nog? Miss Blanco baby. Good evening, Miss Blanco baby. Nog, really? Okay. NOG. What the hell is NOG? Anybody know what that is? NOG? NOG. Northern Oil and Gas. No. Number one, I'm staying away from all energy stocks at this moment in time until that crap in the Middle East, until I get squared away. But July, August, September, December, those are months of the year. Now, don't get me wrong, it may be a great company, it really might be, but I don't do monthly options. Monthly options trade once a month, which means if I trade it once a month, I'm getting 1 check a month. And very rarely have I ever gotten a monthly option that gives me 4 or 5%. And to make matters worse, watch this. To make matters worse, okay, you ready? To make matters worse, look at this. Down, up, down, up, down, up, down, up, down, up, down, up. Great. Look at it. Look at all the movement. That's 30 days. That right there is 30 days. Okay, today's the 16th of July, and this is the 16th of June. That is 30 days. Great. Now tell me, where does it look like it's going to be the next 30 days? It's not that easy, is it? Now 5 days, more than likely, is going to be down here, because she went from 17 to 20. 17 to 20 is $3. $3 on a $17 stock, not quite 20%, but it's pretty close. It's a 20% jump, and don't kid yourself. Do not lie to yourself. If you bought something 2 weeks later, it's up 20%. Are you going to take profits? Don't lie. Don't blow smoke. You either take, right here, here's the bottom. It jumped up over almost 20%. From 17.25 to 20.75 is $3.50. That's a little bit more than 20%. If it jumps up 20%, you're going to take the profits? Probably. So what do you think is going to happen next? Most likely it's going to come back down again. People take profits, stocks drop. Noted, Nog. Sorry, kiddo. You're new here. I appreciate your interaction. I really do. Thank you. But it doesn't fit. Okay? If you go to a store and you see a beautiful gown or a beautiful pair of shoes or a beautiful jacket and it don't fit, it doesn't matter what the price is. It don't fit. It don't fit. P-car. What the hell is P-car? P-C-A-R. P-car Incorporated. No. Same thing. July, August, September, November, December, January. Those are months of the year. No, 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 and hell no. Weekly options only. Rule number 4. Weekly options only. Let's keep on keeping on. Robert, HPE. That's Hewlett Packard. Okay, HPE. HPE. We could call it HPE.2. It's Hewlett Packard, but not HPQ. It's HPE. Okay, so no. See, look right here. No, sorry. Austin, thank you. Rob Casey, my aunt dated Roy Rogers before he went to Hollywood. Oh, you see my Roy Rogers down here? Yeah, I got a couple of those hanging around. It's an old puzzle. Yeah, an old puzzle. We put it together and put it into a frame. I thought it was cool. But thank you for that. Casey thinks England's going to win. All right, Casey, we'll see. Derek, how you doing? That's amazing. Ooh, Hood, really? Hood? Why Hood? Are you on X? Yes, I am, Dave. Wow, all these questions. I'm going to get my seat again because we've got a bunch of questions here. Growth investor. Okay, growth investor. Hold on. Yep, I got that one. So growth investor wants to know why the chart is inverted. Well, I'm on 13 different platforms, which means I got 1, 2, 3, 4, 5, 9. I got 9 iPhones. Now, the selfie camera on the iPhone is not cooperative with YouTube. That's the channel that you're on right now. So there's no way to invert the screen. I just put it up because people want to show up. Nick, how about an index fund like SPY giving 0.2 to 0.3% daily options, making over 1% a week? There's always someone in the crowd. Always. Nick, sit tight. I got something to show you. You're not going to like it, Nick, but I'm going to show it to you anyway. I am. You ready? Here we go, Mr. Nick. Nick wants to take a look at SPY. Okay, so Nick, right here behind me, Yahoo Finance. Yahoo Finance is a free website. You can go there for free. You can look at information. All right, so I use Yahoo Finance to do a little bit of research because it's not available on my trading platform. So what I'm going to do for you, Nick, is I'm going to put SPY Whoa. SPY. And we're going to take a look at SPY. We're going to look at the financials for SPY. We're also going to look at how consistently profitable SPY isn't. Do you like that? You thought I was going to go for it. No, SPY isn't consistently profitable. You ready? Here we go. SPY, la 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 la. SPY. All right, let's get rid of this. All right, you ready? State Street Spider 500 ETF Trust, SPY, right there. It is currently at 700 and, okay, listen closely, Nick. $750 per share. $750 per share. First thing I want you to see, Nick, is I want you to see the yield. Do you understand what a yield is? Nick, seriously. Do you understand what a yield is, Nick? I don't see you putting anything in the chart, Nick. Okay, I'm looking, Nick. Nothing there. Do you know what a yield is? The yield is your rate of return directly related to the price. The price is $750. The yield, are you ready for this? You're going to love this, Nick. You really, really, really are. Everybody's going to love this. Write this down, you guys. This is awesome. Look, SPY, 101%. Isn't that awesome? 101%. 1.01% for the year. Not the week, not the quarter, not the month. No, for the year. 1.01%. And you think that's good? Seriously. Okay. You don't like that? Daily total return year to date. We are in the month of July, the 7th month of the year, and they're only up 11%. Let's go backwards for a second. All right, we want to go to right here. You ready for this, Nick? We're going to go right here. Historical data. Historical data is going to show us exactly what the profits look like for SPY. Okay. Historical data. Now, Nick, and for those of you following Mr. Nick, if you didn't know, historical data is something like this. The date, every single day, right there, the opening price of the day, the high of the day, the low of the day, the close, the adjusted amount, and then the volume. Every number you could possibly need is right there under historical data. You know what else is under there? Yeah, Nick, I hear you. So Nick's argument is it's an index fund. It is more stable than independent stocks. It's the top 500 companies in the U.S. Now, Nick, you're saying it as if I didn't know that. I know all that. Okay, I've been trading for 30 years. There's not very much that you know that I don't know. But I am going to show you something that you don't know or you choose to ignore. Numbers don't lie, Nick. Numbers are what they are. 1 + 1 is going to equal 2 no matter where in the universe you go. So, those are the numbers, historical numbers. What I want to look for specifically are the dividends. Now, Nick, you do know that a dividend is a portion of the profits that the entity gives back to the investors. Chris, nice to see you. Okay? The dividend is the profit the company gives you back. It's an ETF. I really don't care what you want to call it. It's cost you $750 per share. You buy 100 shares, you can sell one covered call. Same thing as a stock. Don't give me the BS. That's an ETF. I know what it is. It's an electronically traded fund. Okay, so we're going to look at the dividends only. Because if SPY is consistently profitable, that dividend should increase. If SPY isn't profitable, the dividend will decrease. It's the simplest and easiest way to figure out, is the company profitable or is it not? You ready, Nick? Let's do this. Dividends only, and I want to look at all the dividends. I'm only going to go back 20 years. Because remember the part where I said simple, safe, predictable, consistent? Okay? Never buy something you don't want to own. Never sell a loss. Number 3, remember rule number 3? Make sure the company is consistently profitable. You ready, Nick? Let's do this. Watch this. We're going to look at 20 years of dividends from the S&P. That would be 2006. Right there. You ready, Mr. Nick? Watch this. June 16th. Wait, no. Sorry. March 17th. March 17th, 2006. The dividend was $51.90. $51.90. All right? So, higher, lower. Higher, lower. Higher. So we got 1, 2. Twice it went down. 1, 2. We ended up at December 8th, 2008. So let's go back to 2008, December, right there. All right. Lower, higher. Lower, higher, lower, higher. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Now we ended up at December 2011. All right, so let's keep on going. December 2011. There we go. December 2011. Lower, higher, lower, higher. 1, 2, 3, 4. 1, 2, 3, 4. We stopped off at June 2014. June 2014. Higher, lower. Higher, lower. Higher, lower, higher. 1, 2, 3. 1, 2, 3. We ended up at June 2017. Hold on. I'm still going. June 2017. Okay. Lower, higher, lower, higher, lower, lower. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7, and we ended up at September 2020. September 2020. Okay. Higher, lower, higher, lower, higher, lower. 1, 2, 3, 4. 1, 2, 3, 4. Now we're on September 2003. Hold on, we don't have much more to go. September 2003, there we go. Lower, higher, lower, lower, higher, lower, higher. 1, 2, 3, 4. Oh, that's it. 1, 2, 3, 4. 1, 2, 3, 4. All right, Nick, explain to me, if you will, in a matter in which I and everyone else can understand, you think S&P 500, the S&P is wonderful, SPY. Okay? Number 1, it pays 1.01% yield. Okay? In the last 20 years, it went down 5, 10, 15, 20, 25, 20, 5, 10, 15, 20, 25, 29 times. 29 times it lost money. It's simple as that. Nick, If it makes money, the dividends increase. If it loses money, the dividends decrease. It's as simple as that. It's a numbers game. You cannot argue with numbers. They're either higher or they're lower. S&P, SPY is not consistently profitable. And whoever told you is not looking at the right numbers. Take a look at the numbers yourself. A profit is a profit is a profit. A loss is a loss is a loss. You're either making more money or you're making less money. There's no other way around it. Stop dancing around. Stop saying something that's not true. I could really care less. I don't do SPY because they're not consistently profitable. Now, you said index funds is more stable than independent stocks. Okay. Hold up. Hold that thought. I'm not quite sure how many of these you want me to show you. But let's start out with this one. This is Microsoft. Let's go back 20 years. Okay? Number one, it's $401. Okay, let's go all the way back 20 years to 2006. You ready, Mr. Nick? 2006. Whoops. You ready? Here we go again. You ready? 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83, 91. Hold on. That's just one. GPC, Genuine Parts Corporation. Sit tight. 2006, right there. 33, 36, 39, 40, 41, 45, 49, 53. Wow, 53 point, that's funny. 53.7, 53.8, 57, 61. 61, 50, 65, 67, whoops, 72, 76, 79, 81, 89, 95, $1, 103, 106. Well, that's two so far. How many more would you like me to see? Someone has not been telling you the truth, Nick. There are companies that are consistently profitable year after year after year after year. SPY is not consistently profitable year after year after year. It just isn't. So something as long-term holding. What's wrong with GPC, Genuine Parts Corporation? 7 decades of increased profits. What's wrong with Consolidated Edison? 200 years of being in business, and they still increase their profits. There's 350 different companies that have consistently been profitable year after year after year after year. SPY is not. Next, let's do the next. That was pretty good though. Ken, what's happening there, Ken? Nice to see you. Nice to stop by. Pee-wee. Why? Okay, yeah. Pee-wee wants to take a look at Plug. 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 Oh, wrong one. Damn it. Try it one more time. Plug. Plug. Is that it? Plug? Okay. I'm going to say no to Plug. The only reason I'm saying no to Plug is it's dropping. Wait for the bottom. If you really like it, wait for the bottom to appear. Because here's the top. Your profit taking, as soon as the bottom appears, you'll turn around and go back up again. If you like Plug. Now, I wouldn't do Plug myself because look at the premiums. 2 cents, 0, 0, 0. If I bought it and I want to do a covered call, it's offering me 0. No, that doesn't work. Now, Mike, weren't you just paying attention when I said make sure the company's consistently profitable? SoFi's not. It's just not. Take a look at the numbers. Are they profitable or are they not? What do we have next? Next. Nick, will I be kicking Kraft off the list now that it's no longer Dividend King? I'm going to have to do some research on that one because I honestly don't know. The first time I heard it was tonight. I do like to do a little bit of research on information that I hear. I'm not saying that he lied. I'm just saying I've never heard of the guy before. We've never talked before. So for someone to just blurt out information, the same thing with me. You shouldn't listen to a word I say. Do your research. Now, I'm assuming you mean Apple because A-P-L-E. I have no idea what that is. But A-A-P-L is Apple. But we'll take a look at that one. Spencer, is that a stock? A-P-L-E? A-P-L-E? Holy cow, it is. And it's also a no. I don't do monthlies. Monthlies just never ever worked out for me. Yeah, Apple Hospitality. I got it. Oh, I'm going to apologize to you guys for not getting all these. All right, SpaceX. Don't even ask me about SpaceX. Has not been around long enough to even show a profit. Let's keep on keeping known. Cabo, how you doing? Brutus wants to take a look nightly. Why no monthlies? Holy cow. You had to ask, didn't you, Spencer? All right, let me show you why no monthlies. All right, Spencer, you ready? This right here, July 16th, June 16th, that is 30 days. Okay? Up, down, up, down, up, down, up, down, up, down, up, down, up, down. Okay, here we are right here. Now, this is 1 month of movement. 1 month of movement tells you where the stock is going. Great. So if this is 30 days, where's it going to be in 30 days? 30 days from now, where is it going to be? How are you going to pick a covered call if you have no idea where it's going to go? Okay, wait a minute. That's only half the battle. Let's look at the other side. You ready? Okay. So, 36 days, which is 5 weeks. 6 weeks. All right. Okay, the current price right here, $16.86. The closest one is going to be the $17.50, and it's paying 5 cents. Spencer, do you see that? Not only do I have to figure out where it's going to be in 30 days, look at the premium that they're giving me. $16.86, the closest strike price is going to be the $17.50, and they're giving me 5 cents. $0.05 for 6 weeks. Do the math. 5 cents for 6 weeks is not even 1 penny a week on, what is this? On a $17 stock. 1% of 17 is 17 cents. This is not even offering me 0.25% for a month. And you want, now, the numbers just never work for me, for monthlies. I'm retired. I got nothing else to do, so I like weeklies. It keeps me active, keeps me doing stuff. Let me get rid of this. I don't do monthlies because the numbers don't work. Which one is that? That is Apple Hospitality. Okay? Brutus wants to take a look at Nike. Interesting. The high of the year, low of the year. Where was it a year ago? Where is it now? Look at this. Down, up. Well, that's easy to see. Okay, the top, down. Now she's going up. 44.57. The 44.50s are going for 90 cents. That's over 2% for Nike, if you like Nike. Well, let's take a look at it, Brutus, shall we? The last 30 days. What do you think? Last 30 days. The top, the bottom, where was it? Where is it? Look at this. Down, up, down, up, down, up. Okay, but here's the bottom. It's definitely going up. The 44.50 is going for 90 cents. That's over 2%. Here we go. Number 5, Nike. Yay! Micron, hell no. Saying no to Micron only because I'm not paying $1,000 a share for anything. No, no, and hell no. All right, we'll change it to a covered call. There we go. The 44.50, there it is. And Johnny, tell him what he's won. Well, Bill, today we have a Nike NKE, 24 July 26, which is next Friday, the $44.50 call option. The stock, it's not moving. Damn it. 122 is the profit, 4,328 is the investment. What does the calculator say? Calculator, come on, wherever you are. 122 is the profit. Hold on. Max profit, 122. Cost of the trade, including commissions and fees, 4,328. Look at it this way. Now, a lot of people get a little uncomfortable when you have to put money up for an investment. It's an investment. How are you expecting it to go? You got to put some money up to get a rate of return. You can't get a return if you don't put anything up of value. So I'm creating what I like to call weekly cash producing assets. This one, it's costing me $2,200. Okay, well, what am I getting this week? Well, this week, I'm getting $122. Big deal. But here's the thing. Is that more than 1% of my outlay? So I take the profit, 122, I divide it by my investment, 43.22, divide 43.22, and it gives me a rate of return for 1 week, 2.8. 2.8% for 1 week. So the questions rattling around your head should go something like this. Number 1, does it make sense? Number 2, do I like this company? Number 3, do I like this company at this current price? TikTok, do we need 3 days of higher highs for this strategy? Nike isn't, right? Hold on, sit tight. I'm going to save this one and I'm going to tell you why in a second. Sit tight. Let me clean up my computer. We're going to come back to that question. Get rid of this. Get rid of that. Get rid of that. Back to this. There we go. There we go. Yo, yo, yo. All right, here we go. Nike. Nike. One covered call, Nike, NKE, 24 July 26. That's next Friday. The $44.50 call option, the stock's going for $44.20 at the moment. 122 is the profit, 43.28 is the investment. For what did we say it was? 2.8? Yeah, 2.8. $2.8% for 1 week. So somebody asked a question. Someone asked a question. Who was it? TikTok 123. Okay, you asked the question. Here's the high. Here's the low. Down, up. Now tell me you can't see that. Here's the high of the year, $80. A 50% drop to 40. Now she's bouncing up. You cannot not see that. The top, the bottom, now she's going up. I can zoom in. Same thing. The top, the bottom, now she's going up. You either like it or you don't. Okay, so we found our 5. What we're going to do is we're going to put the phone number up. You guys can give a call if you want. Want to chat, chitty, chat. Here we go. 727. Phone lines open. 543 543 9418 9418. The phone line is open if you want to call and ask questions. Now, I tell everybody that I don't text, I don't email, I don't Instagram, I don't WhatsApp, I don't Telegram, I don't do any of that stuff. You want to have a conversation with me, you pick up the phone like a normal person. I'm an old dude. I'm in my 60s. I grew up when there was no internet. I grew up when there's pagers. Pagers was a good thing. All right, so that being said, phone lines are open. Give me a call. What do we have next? Micron, no. Dr. Hakeem, I don't buy anything over $400 a share. Sorry. Tony, what's going on, Tony? Rafa, nice to see you. Nova. ICU Mangu. Oh, see, ICU Magoo back again. I remember that. GoPro, really? You want G Pro? GPRO. No. Wasn't that easy? No. Do you know why? I don't do monthly options. Is that first caller of the day? First caller of the day, Gardenia, California. Come on down. How you doing?
Hey. Hello, James.
How are you this evening?
Yes, this is pretty good. Sorry, I have like a little lag because I'm watching you on the TV. But the other day, you were going to explain us how to set up Thinkorswim so that it looks the way that your screen does.
Alrighty then, you ready? Well, first time you log on to Thinkorswim. All right, it's gonna look something. Let's see if I can do this right. Hold on.
James, I'm gonna hang on so I can watch you on YouTube because there's a lot of lag in between. So.
Okay, now on YouTube, you go to the big screen. You go to the big screen TV. You can see it really good.
Okay.
Alrighty.
Thank you so much.
You're welcome. All right, so he wants me to show how to set up Thinkorswim. All right, so mainly when we go to Thinkorswim, home screen. This doesn't look like this. This looks. Oh. All right, so normally, oh my God, my hair looks terrible. Yes, at least I still have hair. I'm in my 60s and it's still there. Thankful for the smaller things. All right, when you first log on to Thinkorswim, you download it. You get three options. Number one, you can trade online at Thinkorswim.com. Okay, that's one. This is through Charles Schwab because Charles Schwab owns this. Okay, it's not mine. It's got nothing to do with me whatsoever. I wrote a book about 18 years ago on choosing the right trading platform for yourself, for your style of trading. About 18 years ago, I wrote that book. But this, I came up with like over 20 years ago because I was looking for a good trading platform. And I used about 6 or 8 different trading platforms. Okay, so this is what you're going to see normally when you first join. Okay, there's a line right here, separates the right from the left. Okay, you can grab it anywhere you want up here, anywhere you want down here. There's an arrow right there. You click on that arrow and everything moves to the right. Okay? So it's over here now. So go back over here, give it back to me. Where is it? Ooh, excuse me. Okay, so that line can be moved any which way you want. Just put your mouse on top of it, grab it, take it to the right, take it to the left, whatever you want to do with it. Okay? I like to have it 1/3, 2/3. I like 1/3, 2/3. Okay, when you first see it, this is normally what it looks like. You have the tabs up on the top: monitor, trade, analyze, scan, market watch, charts, tools, education, and help. Up a little higher, you have messages, support, chat rooms, setup, so on and so forth. There's so many buttons, so many bells, so many whistles with this thing. It's just freaking incredible. Now, I use only about 2%. So 98% of this website, I'm totally clueless. Seriously, I am. And I got no problem saying that. I've been using this trading platform for over 20 years, and I'm totally clueless about 98% of it. Because it has nothing to do with what I'm doing. Why do I want to look at something? That's kind of learning like 17th century French poetry if you want to be a mechanic. Why do you need 17th century French poetry to become a mechanic? You don't. Why do you need to know what the compression ratio is on a 34 Duesenberg? You don't need to know. Certain things you don't need to know. So 98% of this stuff, I have no clue. Nor do I have the desire to learn. Okay, so that line you can move back and forth. Pay attention to all these little tabs have drop-down windows. Okay, monitor. Your drop-down windows, depending on what you want to see. The trade. Again, more windows. What do you want to do? I look at all products. I just want to trade stocks and options. That's all I want to do. Then you have the analyze, the scan, the market watch. The market watch I use because the market watch has the calendar. So the calendar, we'll get to that in a little bit. Let's go to the other side. Over this side here, you have all your perks. So you usually set out with account information. That just tells you what's in your account, that kind of information. Next, you have the watch list. And the watch list has a default list. I use that a lot because there's a lot of good stocks on there. Okay, next we have the charts, or you can have news, or you can have live trading information, or Trader TV. Okay, so what I normally do with all this crap over here is I click on that little window there, the little hamburger, okay, delete gadget, because I don't need it, okay? And if I want to add something, such as watch list, news, Trader TV, calculator, level 2 lines, any one of these things we can open up and we can add to it. So those are little perks you can add. Let's take a look at live news. There we go. So I can add live news to it. Live news. I can enter the symbol and go look at just the symbol. Like if I want to look at just IBM. Okay, so let's pull in IBM. IBM, and it gives me live news on IBM. So I can put that there. I never use it, so I get rid of it. Same thing. Go over to the hamburger in the corner, right click, and oh crap, I want to get rid of this damn thing. Delete gadget. I don't need it. The only thing I use, the watch list, account information, and the calculator. Not the calculator, the chart. Okay? Now, on this side over here, to the right, I want to go to trade. And there it is, what I'm looking for. Each one of these little tiny arrows, each little tiny one, opens and closes certain windows. Every single one. Each one does something. There's another one. Right there, right there, right there, right there. All this stuff does something. But that's basically how you set it up. But I only use the chart. I use the option information. I use the stock information. And every once in a while, I will use Market Watch. Bring it up to Market Watch. The calendar. Now, there's a reason why I only use the calendar. I don't use any of that other stuff. Because as you can see, the calendar gives me all these little green dots. And all those little green dots represents companies that are getting ready to pay out a dividend. Now, I have found in the past, from all my years of trading, companies that getting ready to pay out a dividend have a tendency to increase in value just before the dividend is paid out. So knowing ahead of time when a stock is going to move, that's invaluable information depending on how you use it. Okay, was that good? I hope it was. Next, Thanks for your great sharing. Do you look at the fact if the company is over or undervalued, other than consistent profitability and dividend payout? Dave, that's a good question. All right, Dave, you're relatively new here, Dave. Now, the whole idea of what I'm sharing with you tonight came to me in 2008. 2008, when my 9-year-old daughter says to me, Daddy, can you teach me? So, teaching a 9-year-old, it has to be simple, safe, predictable, consistent, and no way for her to lose. So, to come up with a strategy for my 9-year-old, never buy anything that's not on the list. See? There's my list right there. Never sell at a loss. Kind of defeats the purpose. Make sure the company's consistently profitable. Weekly options. And make sure the numbers work in my favor. Okay? If I'm going to buy UAL, it's at 118. Well, it's coming down. That's on automatic no. Okay? Look at the chart. Oh, wait a second. Let's go back for a second. When I look at the chart, I look for 5 things. The high of the year, the low of the year. Whoops, go this way. Where was it a year ago? Where is it now? And what's the motion of the ocean? The cash flow. Where's the cash going? Where are the investors doing? Down, up, down, up, down, up, down. Well, it's clear as day right there if I zoom into the last 30 days or so. Okay, the high of the year is there, and now it's dropping, 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 dropping. So right there, it's no thank you. I'll see you when you find your bottom and turn around. Because that's what stocks do. They go up and then they go down. And then guess what? They go up and they go down. That's all they do. They go up, they go down, they go up, they go down, they go up, they go down, blah, 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 blah. That's all they do. Up, down, up, down. So is it really that important what the payout is? No. Is it really that important what the volume is? Well, yeah, that's kind of important. You know, you can ask all these questions. Is it really important if it's undervalued or overvalued? Well, it's clear to see that it's going down. Whether it's overvalued or undervalued is irrelevant. It's going down. There's a saying, never ever fight the trend. The trend is your friend right to the end. They go up, it's trending up until it's done. Then it trends down until it's done. And once it's done with its trend, it goes up, it turns around, and it goes down. Eventually, it'll find the bottom, turn around, and go back up again. It was made for a 9-year-old. Adults have a tendency to make it more complicated than it needs to be. Jan, wait a minute. Hi, can you say about Oracle because it's way down? Can you say about Oracle? ORCL. ORCL. Okay. Same thing. Oracle. Here's the high. Here's the low. Here's where it was. Here's where it is. She went up, down, up, down. She's right here. How far down is it going to go before she turns around and goes back up again? That's it. How low can you go before it turns around and goes up again? Steve Long, how you doing? Nice to see you there, Mr. Steve. We got 15 minutes left. All right, so hopefully that made sense. It's the flow. Where is it going? You ever heard that expression, never walk against traffic, never swim upstream, never piss into the wind? No, never spit into the wind. You don't spit into the wind. You don't pull the mask off the Lone Ranger, and you don't mess around with Jim. Collective Beauty. Nice to see you again. You were here before. Zuni Lida. So, if you're using margin, what's the minimum percentage you have to make on the stock for it? 1%. That's it. 1% is 1%. 1% every single week is 50% at the end of the year. Margin, no margin. It is what it is. Orange Baru. Thank you for that. That was very nice of you. Big Boy Fredo. Thoughts on Google. Google has 2 years of dividends. 2 years of dividends. And the cheap bastard couldn't even increase the dividends again. He's got all that money and he won't increase the dividends. Okay, so we already answered that question for you. Running around undiagnosed. Is there a short-term hold or are you keeping it? Okay, run around under, what is it? Undiagnosed. Okay, running around undiagnosed. Okay. Here's the thing. The question was, is this short-term hold or are you keeping it? Let me see if I can make this as clear as possible. I'm 62 years old. I am not delusional thinking I'm going to live forever. And I've never ever seen a hearse go by with a U-Haul. I have no intention on keeping anything. If I buy it, I go with the intention of keeping it long term. But if someone's willing to pay me more money than I bought it for, I'm willing to let it go. Okay? Miss Agile Hood. Now, not that I don't like the company. Look at the numbers. Look at the chart. It's clear as day. The high of the year, the low of the year. Where was it a year ago? Where is it now? She went up, she went down, she went up, now she's coming down. Remember that song from the 70s? What goes up must come down. Spinning wheels. Kiko. Taiwan Semiconductor. Is that right? TSMC. No. Tresmark. TSMC. That's nothing, dude. TSMC. We can't find that symbol. Sorry. Pepsi. Brian wants to. Money moves Tony. Money moves Tony. All right. So, well, at least you don't need a forklift to move you, Tony. Oh, Tony, I'm sorry about that, dude. Seriously. It's the first thing that popped in my head. Money moves Tony. Good thing it's not a forklift. All right. Brian, Pepsi. Now, if you didn't know, remember that question from earlier today? What's the risk? Is there a risk for Pepsi going out of business and just folding their doors and just never making Pepsi again? There is. There's always that risk. Nice to see you. Good evening. Andy Brar, nice to see you again. So here's the question. Is there risk? Well, there's always risk. If you stay home and stay in bed, well, you're risking a tree falling on your head. You're risking somebody driving into your house. You're risking a plane crashing into your house. Remember the movie Garp? Plane flew right into the tree. There's risk everywhere in life. There's risk of doing nothing. There's risk of doing something. That's amazing. Thank you there, Derek. Dell wants to take, that's funny. Dell wants to take a look at IBM. Oh, wait a minute. We're on Pepsi. Top, bottom, where was it? Where is it? Up, down, up. Well, she's going up off the bottom. Look at this. The top, bottom. Now she's bouncing up. 139. The 139 is going for 217. Oh, hell yeah. Those numbers look good. Dell, IBM. IBM. Oh, remember we looked at this the other day? And I said, oh, I'm excited about this. Well, I am. Okay, so I do have some IBM, but why am I excited about it? Look at this. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Gap down, gap down, gap down. Well, what happens after a gap down? She goes up. After a gap down, she goes up. Gap down here, well, I'm waiting for her to go up. Let's zoom in a little closer so you get a better view of it. You ready? Here's your last 30 days. She shoots up, there's the top. Big drop, New bottom right there. Now I'm waiting for the bottom to show up because that gap right there is going to fill eventually. Where did that gap come from? That gap right here, it went from 290 to 230, 290 to 230. Do you know why that happened? You ready? Listen to this. We missed our target. That's it. We missed our target. They missed the earnings that they were going for. We missed our target, and market maker took all that profit away. I say it all the time. Stocks go up, take your damn profits. You don't take your profits, you have no right to bitch and moan when the market maker takes it away from you. It's not a profit until you take it. Also, it's not a loss until you accept it. Okay, so if you bought up here, dropped here, and you sold down here, that's your own damn fault. It's not a loss until you take it. Just like a profit. It's not a profit until you take it. It's not a loss until you take it. Miss Agal, we already looked at Hood. It's going to be a no. MJ, what's happening, MJ? You want to look at, what was that? Post. Post. P-O-S-T. No. I don't do monthlies. July, August, September, December. I don't do monthlies. The numbers just never work in my favor. Never. Cade, do you sell covered calls? Yes, I do. Cade, Orly. Oh, that's pretty Orly. O-R-L-Y. O-R-L-Y. Orly, no. Wasn't that quick? Do you see how quick that was? It's a yes, it's a no. That's it. Yes or no. I don't do monthlies. July, August, September, November, December, January, February, March, June, January. No, I don't do monthlies. The numbers never work in my favor. Never. B-pop. What the hell is B-pop? It sounds like something you get at a penny candy store. B-pop. Or is that a certain flavor? July, August, September, October, no. Simone is in the house. What's happening there, Simone? Nice to see you. Joe Schmo. The only thing they aren't making any more of is land. That's not true. Sorry, Joe Schmo. You and I agree on a lot of things. One thing I do not agree with you is on the land, because actually they are. They're going out into the middle, not the middle of the ocean, but they're going out to the continental shelf. And just before the shelf, they're dumping off huge amounts of boulders. What do you call that? The Burj Khalifa. I think it wasn't the Khalifa. What was it? Anyway, you get the Palm Islands. They weren't there before. They're there now. The World Islands. The World Islands. You ever see those? They weren't there before. They're there now. They're just dropping huge amounts of sand smack dab in the middle of the ocean. Boom. Up comes this piece of land. And then you have volcanoes. Just one day it wasn't there, next day it is. So they are making more land, just not to the degree in which we can use it. What is this? Bread and butter, dude! Dude, we got 5 minutes left and you're just showing up? Better late than never, dude. Nice to see you. Can we check Coles? Simone, of course we can check Coles. K-S-S, Coles. Ooh, check that out right there. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, up, down, up. That is definitely going up. 30-day high, 30-day bottom. Now she's moving up. Let's zoom in so you can see it a lot better. Say it out loud for the people in the back. You ready? Here's the top. Here's the bottom. It's plain to see. Up, 30-day high, down, 30-day bottom. Now she's going up, 1651, 1650s, 106. That's over 5%. If, and only if, you actually like Coles. You either like it or you don't. Like it or you don't. That's it. 4 more minutes. What do you got? What do we got? What do we got? What do we got? AT&T. Didn't we look at AT&T earlier? Yes, we did. Look at this. Lovely, lovely, lovely. You got the high. You got the low. Where was it? Where is it? Look at this. Up, down, up, down, up. Love it. Look at this. 21.98. The 22s, they're going for 55. That's over 2%. If you like AT&T. Isn't that simple? If you like AT&T. Mr. Phil, I had the volume down due to my kids. Just realized he must be doing covered calls. Duh. I didn't say that to him. He put it in there. Okay, duh, D-U-H, duh. Ariel, 31, how you doing? KW Lewis, ODT 30-minute chart pays big. Terribly sorry, dude, doesn't work for me. SPY, oh hell no. Okay, KW Lewis, let me explain something to you. I'm 62. I am retired. I enjoy, listen, you're going to find this funny, but some, maybe one or two, you will understand it. You ready? I enjoy watching the grass grow more than making money. Sorry. Okay, I'm 62. I'm retired. I have enough to be comfortable. I'm no longer, my younger days, I was greedy. It's always like work, work, work. My first job was 1975. I was 10 years old. Yeah, in the 70s, you could do that. 10 years old, you could have a job. See, some of you newbies saying, no, you can't. Yeah, you could. 10 years old, imagine that. I was in fourth grade, 1974, with Mr. Renault, was the vice principal, and he was my homeroom teacher. Okay? I'd go right from school, we get onto the school bus, and we get off the school bus, and we jump right in the back of Old Man Summer's. We didn't even go home. Okay? We went from the school bus in the back of Old Man Summer's. It was me and Bruce. Bruce was a year older than me. Okay? And we'd go out in the woods, and we cut down trees, and we do firewood, and then sometimes we go into the cornfield and do corn, and sometimes we go to the squash field and do squash. Yeah, 10 years old, my first job. I put in 5 decades. I don't do companies that don't pay on a weekly basis, and I definitely don't do SPY because it's not consistently profitable. We looked at SPY over an hour ago. Okay, I think it was 29 times. In the last 20 years, it went down 29 times, which means the dividend on SPY over the last 20 years went down 29 times. Okay? 29 out of 80. Because there's 4 dividends per year, and 29 of them went down. I don't do SPY. It's not consistently profitable. Hey, Jim! How you doing there, Mr. Jim? All right, Joe Roy, are those not all 1% and over? And the original number was 0.59. Joe, dude, I have no idea what you're talking about. Joe Roy, are those not all 1% and over? And the original number was 59. Oh, you talking about the dividend? It's a $750 stock. $750 stock, and the dividend is 59 cents. Joe Roy, I don't see what the appeal is. Uh-oh. Watching you, I realize I don't know what I don't know. Please run through SOXX. Uh-oh, you're not going to like it, dude. Hold on, let's do it. SOXX. SOXX. Well, the top, the bottom, look at this. Up, down, it's at 530 right now. So let's go take a look at Yahoo Finance. I think that's what you want to see, Yahoo Finance. Yahoo Finance. SOXX. First thing we want to see. Are you ready? Uh-oh. iShare Semiconductors, $530 per share. Here are the dividends. Are you ready? Are you ready? Are you ready? Are you ready for this? All right, let's go. Let's do this. 20 years ago. There it is, right there. All right, are you ready? 20 years ago. 1.2, 1.6, 0.3. That's horrible. All right. 2006, 1.2. Higher, lower, higher, higher, lower, lower, higher, higher. 3 out of 5. One, two, three. We stopped off at 2008, December. All right. Lower, higher, lower, lower, higher, higher, lower, higher, 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 lower, higher, lower. 1, 2, 3, 4, 5, 6. Whoops. 1, 2, 3, 4, 5, 6. June 2013. Hold on. June 2013. June 2013. Higher, lower, lower, higher, lower, higher, lower, lower, higher, lower, higher, higher. 1, 2, 3, 4, 5, 6. 6 again. 1, 2, 3, 4, 5, 6. June 2016. June 2016. Okay. Higher, lower, higher, 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 lower, higher, 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 lower, higher, higher, higher. 1, 2, 3. One, two, three. September 2019. Okay. Lower, 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 higher. Lower, higher, lower, higher, lower, higher, lower, lower. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. June 22. Hold on, we're almost there. June 22. Okay, June 22. Higher, lower, higher, lower, higher, lower, lower, higher, higher, lower, lower, higher, higher. 1, 2, 3, 4, 5, 6. One, 2, 3, 4, 5, 6. September 2025. Hold on, we're almost there. September 25. Right there. Okay. Lower, lower, higher, higher, lower, lower, higher. 1, 2, 3, 4. 1, 2, 3, 4. Okay, so who came up with that one? User 9278550348813. Okay, why couldn't your parents name you Pete? I'm going to call you Pete. All right, Pete. Watching you, I realize I don't know what I don't know. Please run through SOXX while you're on the ETFs. Well, here you go. 5, 10, 15, 20, 25, 30, 35 times. So in the last 20 years, okay, 4 dividends a year. 4 dividends a year, that's 80 dividends. Out of 80 dividends, this thing went down 35 times. As the profits increase, so do the dividends. As the profits decrease, so do the dividends. So you're buying something, or you're thinking about buying something that's almost a 50-50 up, down, up, down. Yeah, no thank you. You keep it. I want to call, but I only have my phone. Do you have a certain time window you get in at? Yeah, Derek, I jump in at 8 p.m. Eastern Standard Time. Okay. Building your legacy. Oh, I like the name of that. I'm kind of interested in what you got. DM me. I want to hear what you got to say. Seriously, I do. Because I'm trying to build a legacy for my kids. So, you, Bill, I'm going to call you Bill, user 9278550348813. Okay. At Sox. Hold on. Let's see how worse it gets. We're going to go to the summary next and see what the yield is. You want to see what the yield is? I'm kind of curious. Summary. I can't believe people buy this shit. Look at it, it's got 23%. That's not even 0.25% for the year. Not even 1/4. It's not my numbers. I didn't come up with it. It's right here. 0.23. 0.23%. I just don't understand what you guys do sometimes. I really don't. Baffles me. Baffles me. Thank you for the great sharing. Do you look at the fact little companies is over undervalued? Yeah, we already did that question. No, it doesn't bother me. RKLB, Rocket Lab. Let's take a look at next time. Kel, University of New Hampshire, next time. Joe, you got dividend stocks to pay you a weekly and growth. No, Joe, you're hearing what you want to hear, Joe. Okay, I never, ever said weekly dividends. I said dividend investing for weekly cash flow. Nowhere does, yeah, I know they're in the same. All right, here's an idea, Joe. You ready? This is going to call it a lesson in syntax. Do you know what that means? Lesson in syntax. You ready? I got a couple of words for you. The dog bit Johnny. 4 words, right? Think about it. The dog bit Johnny. You got a vision in your head. There's a dog biting Johnny. Well, great. That's one meaning. 4 words. The dog bit Johnny. Well, here you go. The exact same 4 words. Johnny bit the dog. Total different story. Exact same words, total different story because they're in a different order. What I said, Joe, is dividend investing for weekly cash flow. Same thing. Johnny bit the dog bit Johnny. Same 4 words, total different meaning. What's your top 3 weekly call stocks? That would be, this week it would be, wait. Well, I like Macy's. I like Kohl's. AT&T is good too. You got dividend stocks to pay weekly and grow. Yes, they do. They pay me weekly, not weekly dividends, but weekly stock options on dividend stocks. Cade, you have to own the stock to make a covered call. Yeah, you're absolutely correct. I don't think I ever said that you didn't. But thank you there, Cade. Ocean! You missed the 4 and 5. Okay. Joe, you got the dividends. Okay, yep, we already did that one. Don't. Trump is talking. Yep, so what? Kate, if I own 1 share of Nike, can I make a covered call? No, you can't. Murph, man, love Procter & Gamble. I do. You need 100 shares to do 1 contract. Jesse, nice to see you. Dvorky, well, let's take a look at it next time. Yes, I know. I was answering someone. Cool. Okay, analyze. You missed that one. So you more carefully swear. I have no idea what that means, Didier, John. So you more colorfully swear. Oh, okay. Okay, I got that one. Day of Glory. Nice. Observer. That was great, James. Thank you. You're welcome. Only broccoli. I love broccoli. Take a look at Micron. No. Micron's out of my price range. Not really, but I ain't doing it. I'm not going to buy a stock over $900 a share. No. Tito Jupiter Finance. Interesting. Richard, do you have a preferred delta range? Okay, Richard, you're under the impression that a 9-year-old is going to understand the Greeks. Think about it, Richard. The strategy in which I'm giving to you for free was created for my... Oh, you know what? We haven't done this in a while. Let's do this. Come on. My TV turned off. All right, Richard, this is going to be for you. You ready? Sit tight. Oh, let's get rid of this.
Wow.
La la la. All right, Richard, this is going to be for you. You ready? Here it comes. Here it comes, Mr. Richard. Okay. Videos. That's my website. The 10MinuteTrader. Whoops, wrong one. The 10MinuteTrader. Yay, the 10MinuteTrader. Okay. So we'll look at the videos. We won't look at the oldest videos because I've been doing this for a while. Richard, check this out. Okay.
Which my dad doesn't control that. That's what I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting for lists of stocks that you can choose from that'll help you get the best return on your money.
There's over 20 days.
And there's me.
January. There's over 20 days in February. There's over 21 days in the month of March. What does that mean? That means every single day you can buy a different.
It's my favorite part coming. Hold on.
Company paying out dividends.
Yay! All right. So the reason I'm showing you that, Richard, because my 9-year-old daughter, back in 2008, my 9-year-old daughter asked me, Daddy, can you teach me? So what you're getting at the moment, Richard, is what I created for my 9-year-old. It had to be simple, safe, predictable, consistent, and no way for her to lose. So, Richard, I came up with 5 rules for my 9-year-old. Rule number 1, never buy anything that's not on your list. That's rule number 1. Rule number 2, never sell at a loss. Rule 3, make sure the company's consistently profitable. Rule 4, weekly options only. And then rule 5, make sure all the numbers work. Okay? So, trying to explain Delta to a 9-year-old, pointless endeavor. No, thank you. I didn't even want to try. So, this is what you get. Simple, easy, predictable, consistent. No way to lose if you do it. Ruben! I see you there, Ruben. How you doing, brother? Nice to see you, Ruben. So, hopefully that makes sense, Richard. All right, I think that's about it. All right, wavelength. Cash secured puts, absolutely. I do both of them, absolutely. BYC official TikTok tomorrow. BR tomorrow. Wait a minute. No. Not tomorrow. Sunday. 'Cause I don't do Friday nights and I don't do Saturday nights. Okay, so next time I'll see you guys is Friday. Okay, I think that's it. Okay, Observer. Investors are worried that it may not be able to fill AI-based orders and high debt. Okay. It borrowed a bunch of money and profits justify the loans may take too long. Yep, could be. He's talking about Oracle. Could very well be. Okay. Has anyone ever called you GoldenEye? No. But thank you. They used to call me the one-eyed pirate. Okay, because back in, I think it was 1981, I got a nail stuck in my eye, and for like 6 months to a year, I was walking around with a patch. I kept bumping into people, on the left. It was funny. It's like, cool, oh, sorry. So anytime we're out in public, I always had my friends, one on one side of me and one on the other side. I always walked in the middle. I never walked on the left-hand side because I kept bumping into things. So anyway, that being said, you guys have a great night. We'll do this all over again Sunday. All right, so you all have a good night. Peace out. Love it. All right, here we go.
It takes 90 seconds for this NASA.
Why do they keep putting up commercials? I don't want a commercial. I want my mood music. My exo. Here we go.
Stars and dive into the deep, fixing the world while the rest of us sleep. Your heart set on giving, no matter the strain, building your legacy through love and brain. Julie knows that fire in your soul, the kind that lifts the broken whole. James, you reach the skies, no one dares. In your hands, the future's caught unawares. That's to know what the hell we're thinking. You laugh as the yacht keeps the daylight blinking. Every day's a quest, not some disguise. With dreams in the storm, the dream never dies. Retired, you say, with a wink and a grin, but the podcast is rolling, pulling us in. Your compass is love, with your kids as your guide. Shining seas line with vision and pride. Julie's here, who adores your spark. The dreamer who lights up the dark.
bowl of strawberries when you drop this device in the water. These berries are fresh from the store and already rinsed under the tap, but within 10 minutes the water changes color. What floats to the surface will change how you feed your family. My friend works in food safety testing. Last month she watched me rinse strawberries under the tap and said, "You think that's doing something?" I said, "Of course it is." She shook her head. She said, "Pesticides are designed to survive rain. They're bonded into the wax on the skin. Your tap water is hitting a chemical..."
What he's done is robbed my phone, that's what he's done. He's not robbed anybody's bloody phone. Go and get him out of here and have a look in his pockets. He wouldn't rob a phone. My lad's never stolen a thing in his life. Oh, has he not? Your little cherub. Well, I'll tell you for nothing. I saw him. He had his hand in my back pocket and ran off. That's why we're chasing him. Ask him to here.
Have a word with this fellow. He thinks you've nicked something.
I don't think I know he's nicked something.
Empty your pocket. Show this fellow you've got nothing. He thinks you're a robber. You're going to make a fool out of yourself.
You'll make a fool of yourself.
He defended his son without hesitation until the evidence appeared.
What do you think that is?
Well, that is, isn't it?
That's not his phone. Have a look at the pictures on it. It's my phone.
That's yours, isn't it? Tell me that. So
That's it. Stole it from me. That's why we're chasing him.
you have made me look like a right idiot. So I am so sorry.
You want to be sorry? I'll be ringing the police.
My mates dared me to do it. Like, I weren't expecting him to get so angry. And...
Your mates dared you to do it. Would you stick your hand in the fire if they told you to do that as well? I didn't bring you up like this. This is really embarrassing. I'll deal with him. You, pal, you're going to go and live with your mother if you give me any more stuff like this. I can't be having this on the doorstep. It's disgusting. It's disgusting. I'm sorry.
It's disgusting, I'll tell you that.
Upstairs now. Go to your room. I am so sorry about that.
You like to buy a $100 bill for $1? Okay. You have $1? That's too big of a bill. I'm only selling it for $1. I'm really looking for $1 bill. I only take cash. Is this dirty money? Where'd you get it from?
I asked around and paid $5.
You paid $5 for a $1 bill, actually.
Yes.
Well, hey, a deal's a deal. Boom.
Thank you.
You're welcome. Nice work. I saw you hustling over there. That's hilarious. You paid $5 for $1 and $1 to $100. Genius. You like to buy a $100 bill?
Excuse me, can you rap?
Too sad to rap.
Excuse me, can you rap?
Yeah, I can actually.
Amazing. Are you an artist?
Yeah.
What's your artist name?
TX2.
Can you freestyle?
Yeah, I can try.
Last person to freestyle got 20 million views. You think you can beat it?
I bet I could. To the parking lot, taking drags, but spark is gone. Lungs are black, but our hearts are not. Traded laughs for a sunken cost. I hated that I burned a hole inside the ribcage that you sold. The fix of broken parts and coal. I had left this side to soul, and now I'm a mess. I'm a mess. Something that I can't let go. I confess, I'm obsessed by your touch. I'm so miserable. I hope that she knows I don't want to fall from love. Except for that first night.
Excuse me, can you rap?
Hello, ma'am. Would you like some macarons? They're fresh and very affordable. Oh, ma'am, are you not feeling well? Take these. They're on the house. Homemade and no additives. They might make you feel a bit better.
Go away. Mrs. Feaster doesn't eat desserts.
It looks good. Do you work for Atlantic Desserts?
Yes, ma'am. I'm trying to save up to buy my girlfriend an engagement ring. Just can earn some extra money on my lunch breaks.
You're a responsible young man. My son is about your age. I wonder if you found somebody too.
Strange. I feel like I've seen her somewhere before.
Is something wrong?
Nothing, ma'am.
I'm gonna have all of them.
Ma'am, I really appreciate it, but they're going to spoil soon because there's no preservatives. How about you just take? We can finish soon.
Don't worry. I'll share them as that. Hope you get to marry that girl soon.
Try this one first. I'll put the rest in your trunk. A copper wire ring. I just feel something.
Is something wrong?
Nothing, ma'am.